exercise 6-7 in your text, Connect will have labeled this problem 6. Asks us to prepare a contribution margin income statement by division. And it gives us some information, and we need to get this information and use it carefully. So the contribution margin ratio, the overall sales are $500,000. The contribution margin ratio is 46%, and net operating income is $10,000. The North Division's contribution margin and contribution margin ratio, let me find a different color. The North Division's contribution margin and contribution margin ratio are $150,000 and 50%. The South Division's segment margin, I gotta find a different color, be yellow. The South Division's segment margin is $30,000, and the company has $90,000 of common fixed cost that they refuse to trace to either division because it doesn't make sense. This is a problem that if you use my templates, it'll make your life a whole lot easier. So I'm going to start by going out and filling in the things that I know that it gives me. And I think once we fill those in, I think you'll see that it's really not that difficult. The thing is getting them in the right format. And that's a standard format. So they tell us that the company's overall sales is $500,000. Okay, overall sales, total company, $500,000. That's 100% of sales. They tell us the contribution margin ratio is 46%. Well, if the contribution margin ratio is 46%, the variable expenses have to be 54%, because these have to add up to 100%. And they tell us that the net operating income is $10,000. Now that's net operating income for the company. That's $10,000. So that's that piece. So we've taken care of that. Now the North Division's contribution margin and contribution margin ratio are $150,000 and 50%. So if their contribution margin is $150,000 and that's 50%, we know, and we can just do this real quick, that the variable expenses have to be 50%. That has to be 100% of sales. And if this is 50% contribution margin, this has to be the same amount. So the sales have to be $300,000. So we've got that piece. Now, let me draw your attention to this. And this is a good problem because it makes you think a little bit. This and this and this are related. So if we have 500,000 altogether, and we have 300,000 from the north, 200,000 is 100% of the sales from the South Division. Okay, the South Division's segment margin is $30,000. So when we come all the way down here, the segment margin, the territorial segment margin is $30,000. Okay, let's see what else they tell us. Let's see, is that all? Let's see, we got the contribution margin. Got that, we got that. Okay, so we pretty much have all the pieces. Now let's go through and fill in all the pieces. Because you have all the pieces, you just don't know that you have them. We have to figure out the company-wide variable expenses. Well, it's 54% of 500,000. That's 270,000. That's the variable expenses company-wide. Well, if total is 270 and 150 is north, 120 has to be south. They have to add the 270. So now we can figure out the contribution margin for the Southern Division. It's 120 divided by 200, 60%. Which means the contribution margin has to be 40%. We know the contribution margin is 80,000. Sales minus variable expense. Want to check yourself? 80 divided by 200, 40%. Okay, the contribution margin here, and I'll just come down. We know the variable expense are 270. Total sales were 500, so the contribution margin, by definition, sales minus variable expense, 230,000. And again, you can check yourself. Take 46% of 500,000. It comes out to 230,000. Now, we have to do some more figuring here. Do they tell us anything about traceable fixed expenses? Let's see, I don't think they do. The company has 90,000 of common fixed expenses that can't be traced. So common fixed expenses are 90,000. So if we subtract our common fixed expenses from our total segment margin for the company and come up with 10,000, the total margin for the whole company has to be 100,000. Just has to be. Because to get net operating income for the company, I subtract from the, it's not territorial for the company, it's the whole company's margin is 100,000. If there's 90,000, if I end up with 10,000, I had to have 90,000 in common fixed expenses. And if I had territorial or company-wide segment margin of 100,000, my traceable fixed expenses to the entire company had to be the difference between the contribution margin 230 and the segment margin 100, so that was 130. Now, we have to do some math here to figure this out. We can do that, and everything is expressed as a percentage of sales. So 130 divided by 500 gives us 26% is the traceable fixed expenses for the entire company. The segment margin is 100 divided by 500. Total margin for the company, 20%. Common fixed expenses, 90,000 divided by 500, 18%. And the net operating income for the company, 10,000 divided by 500,000, 2%. Okay, we're pretty much done. Now we got to just work our way across. So we have to figure out our traceable fixed expenses here. And we may have to do some figuring to come up with that. We're told that the Southern Company, the Southern Division, has 30%, should be out here, sorry, of the total of 100,000. So if they have 30% of 100,000, that makes it 30,000. That's how much they made. That was their margin. So if they made 30,000, and again, think what I'm doing. They give us that it was 30%. We figured out that the total company margin was 100. 30% of 100 is 30,000. If we had 100 and these guys accounted for 30, these guys had to account for 70. And again, we can do some math here. So let's go through and figure out what we're doing here. And remember, this was, they give us the margin is the Southern Division's 30,000. I put down 30%. They gave us the 30,000, so we had to go the opposite way. They just gave us that. Sorry, that was my fault. Or, in your vernacular, that's my bad. Anyhow, let's continue. If our total segment margin here was 70,000 and our contribution margin was 150, our traceable expenses had to be the difference, 80,000. And again, we'll do the percentages. 80,000 divided by 300,000 gives us 26.7% as the margin. 70,000 divided by 300,000 gives us 23.3%. And the only thing that's left here is we're told, and they give us this 30,000. I lied to you when I said they gave us the 30%. Okay, they gave us the 30,000. Okay, so they gave us the 30, so if we had 100 altogether, they gave us 30 for here, the other 70 had to be there. 30 divided by 200,000 gives us a segment margin of 15%. Remember, these go up here in that line there. And if we had 80,000 in contribution margin, and we ended up with 30,000 in segment, the traceable expenses had to be 50,000 And 50,000 divided by 200 gives us 25%. So, based on that information, we could fill in all the blanks and make sure we knew where every piece came from. And it's really just a matter of laying it all out and looking for the pieces that you can fit. Every problem gives you all the information you need. They just may not give it to you in the format that you prefer, and you have to fuss with it a little bit.